Let's get started.
Welcome to the Financial Purpose Podcast. All opinions expressed by me or guests of the podcast are solely our own opinions and do not reflect the opinion of Life Moves Wealth Management. This podcast is for informational purposes only and should not be relied upon for any investment decisions. Clients of Life Moves Wealth Management may maintain positions in the securities discussed in this podcast. Welcome to the Financial Purpose Podcast. This is episode 77. I was waving my arms like a madman because I didn't know what episode it was. And anyway, here we are. Episode 77, Financial Purpose Podcast. Thanks so much for joining. I'm in a really good mood today, and that's not bad for a Monday, but launching something new on Life Moves Wealth. I want to share it with everybody today. I talk a lot on this podcast about things like, being a business owner and how you tie that to your personal finances and how you get those two things working in symphony so that way they create a masterpiece rather than a disaster piece. And that's a Slipknot plug. But anyway, it's very difficult to do that as a business owner. And it's even more difficult to find a financial advisor who knows how to do it, who understands business owners, because most advisors that you talk to aren't business owners. They work for the firm that they represent, and it's just they're kind of like pseudo business owners. But until you've actually gone through the whole process to own a business, try to make payroll, have P&L responsibility truly, be completely 100% responsible for how that thing grows, operates, compliance, tax law, filing all of the unemployment insurance paperwork and, making sure that the entity is properly structured and you have a good operating agreement and everything is done. Until you have all those things in order, then you're probably not running a business. And I have found that most advisors don't have any knowledge of that stuff because they haven't done it. And so that's a differentiator for Life Moves Wealth and for what I do professionally. I understand business owners. I am a business owner, and it's a different approach. So I've spent the last couple of weeks, months, kind of trying to refine a process, come up with like a workflow to make this work, and finally, I was doing some collaboration with my good friend ChatGPT, and we were kind of bouncing ideas back and forth, which, by the way, you can do. It's really fun if you figure out how to prompt the program. You can throw it an idea, and it can refine it for you, and then you can keep throwing it back and forth, and eventually you're going to come up with something pretty cool, and that's what this is. So I'm going to tell you, it's just as an aside, it's getting a little warm here in good old Arizona, and I think this might be like the last week or so for the jacket. So I'm wearing it all out, going to an event later tonight. Love wearing my sport coats, but it's getting warm. So it's almost we're almost out of jacket season here in Arizona. But when I first moved here, I know you probably don't care about this, but it's just fun to talk about. When I moved here, I still kind of had that Midwest mindset where I was in a full suit and tie every day. And I moved here in August, and people looked at me like I was from another planet. And so now, being in Arizona for almost 6 years, when I see people out and about, especially in, the months of like April through October, and they're in a full suit and tie, I'm just like, man, you need to break free because your slave driver is forcing you to dress uncomfortably. And that's not nice because it just gets too hot to wear that stuff. But anyway, all right, let's do this launch already. If you go to lifemoveswealth.com, you will see this. If you go to my Instagram page, you will see this. Made a big push for this morning, officially launched. Trademark application has been submitted. Everything's ready to go. And so I'm proud to present the B.O.S.S method, TM, the business owner strategic success. Now, here's what it is. It's an acronym, and I'll go through that. But the B.O.S.S method, the business owner strategic success, is a financial framework designed exclusively for entrepreneurs who want to maximize their business and personal wealth. Again, those two things need to be tied together. without the misaligned advice of traditional financial advisors. Now, what I mean by that, misaligned, is oftentimes advisors give advice in a way that benefits how they're compensated. And so saving money into an IRA, 401k, brokerage account, trust, life insurance products, any of those things, those are great ways to diversify assets. And that's a problem for most business owners. We have very high concentration of our wealth and net worth is represented by the value of the business. And most of us make up the value of the business because we don't have any other way to truly get a good valuation. We kind of think of it kind of like real estate, where we know somebody who has a similar business, but we have this, better looking bathroom, or we have this bigger patio, or the lot size is larger, and we have a swimming pool, they don't, that kind of thing. And so we start using those thought processes to value our business, and they couldn't be further from accurate. So, but anyway, the misaligned advice comes in because they often are using a false value for your business. They're asking you to do things that may conflict with what you're doing financially in your business. And sometimes they don't even know fully what's happening in your personal financial life. So you just get kind of siloed advice, if you will, or the things just aren't really working together. And typically it's the advisors have no insight into how you're running your business. They just know that you run a business. They know that you own it. They know that someday you're going to sell it, and they know that it's going to be a pile of money that they'll get to manage and, add value by helping you defer taxes and things like that. So the misaligned advice is that it doesn't happen soon enough, and it often conflicts with everything that's going on if it were all working together. So at Life Moves Wealth, we recognize that business owners don't just need investment management. They need a fully integrated strategy that aligns business profitability with personal financial independence. And that's what we're all going for here, right? Financial independence. So the B.O.S.S method provides a step-by-step process to optimize cash flow, reduce taxes, protect assets, and create an exit strategy that builds lasting wealth. This isn't just another financial planning process. It's a comprehensive business owner specific system that puts you in control of your financial future. So let me walk you through the B.O.S.S acronym. And here's where this all kind of comes together. So the B.O.S.S method ensures that both sides of your financial world, business and personal, are working together. Each letter represents a critical stage in the journey from business operator to financially free entrepreneur. And those two things are polar opposites, right? A business operator is someone who started a business that essentially they just kind of created a job for themselves, a rather high-paying job, versus an investor or an entrepreneur who is able to invest in the business and see it as an investment and treat it like an investment that has value and that can grow and that can be optimized for their financial future benefit. So the B in the B.O.S.S method stands for build and balance. And what we do under the build and balance stage is we establish first a strong financial foundation that integrates personal and business finances. Then we're going to align your business cash flow with your personal wealth building goals. Now, I talked about this last episode or the episode before that, where we have to understand what creates your personal cash flow and what creates the business cash flow, because if one of those is strained, the other one's going to suffer. So if you don't have enough cash flow in the business, it's going to be very difficult for you to pay yourself appropriately and possibly even to make payroll. And that's a famous struggle of every business owner is, all the war stories about the weeks that we had to really leverage everything and weren't sure how we're going to make payroll, didn't have a dollar in the bank account, all of those things. Those are all war stories. They happen to every business owner at some point and usually in the early stages. And God love every business owner that pushes through those weeks, because those weeks suck. I remember before I was an advisor, I was GM of a specialty construction company. I had full P&L responsibility. And there was a period in the winter, the last winter that I was in the business, of about almost 3 months, where to make sure that we were able to produce work and pay the employees, I, as the GM, did not take a paycheck. And so I got the paycheck and just held it and just held it and just held it. And then finally, we were able to trickle those out in the spring once we had a lot more work. So sometimes, as the business owner, if you're not financially prepared to take a couple of weeks off from payroll, you're going to stress your personal cash flow. And we have to be able to make sure that the business and the personal, that you're prepared for any kind of contingency planning that we need to do and should do to make sure that you don't tank yourself personally or tank the business financially, robbing each other of cash flow. The next thing we're going to do is structure owner compensation and distributions for maximum tax efficiency. Now, I can't tell you the number of times that I have a business owner tell me that they are an LLC taxed as an S Corp. They think they're an S Corp, like they think they're actually a corporation, but they're really an LLC taxed as an S Corp, and they don't pay themselves on a W-2 basis. And the problem with that is when you're taxed as an S Corp, the IRS requires that you pay yourself a fair and reasonable compensation on a W-2 basis, which means like taxes get withheld and you get a regular paycheck and you've got to set your frequency of payment, whether it's weekly, biweekly, monthly, whatever you're going to do, bi-monthly, whatever frequency. You have to pay yourself a fair and reasonable wage. And then if your entity is still set up as a flow-through, which most small businesses are, you're going to be taxed on the net earnings of the business. And that's going to be taxed as income to you personally. Now, that's where a lot of business owners will play games, and they'll, at the end of the year, when they see, they'll start checking their P&L at the end of the year to see how much money they've made and really how much money they need to spend. And this is where we end up with either business owners who buy things for the business that aren't necessary, or I've seen people say, well, I'll just go buy a vehicle or a piece of equipment and then I'll make payments on it. And the problem with that is, sure, you bought something and maybe you'll get a tax benefit, but now you just cost yourself a little bit more weight on your cash flow, right? So there's that. Or this is where we'll see business owners start living out of their business, which is where they run everything, all expenses, personal expenses. There's a gray area they operate in. They push the lines of the gray area and everything gets ran through the business. So suddenly things like home insurance go through the business and personal auto insurance goes through the business, and things like sometimes I've seen home mortgage payments go through the business, especially if they have a home office. They'll just run everything at home, internet, utilities, all of it, phones, everything goes through the business, and then that brings down their net income. And that becomes problematic because then your business looks like you don't know how to run it well because you don't have any profit. And then you have to start going to do ad backs. And then the more ad backs that you do, it makes it look like you really run your business very poorly. And that can cause issues, especially if you, want to set up an exit plan, or if you want financing or something like that. It's going to look like you're not very good at business. And in fact, it's going to make it look like you're running your business pretty shady. So we want to make sure that we're setting up a system where the owners are properly compensated with the right structure, not only for tax efficiency, but also to make the business truly be an asset that works and not just a piggy bank that you can break at any time. The next thing we're going to do is we're going to build a business financial plan in addition to a personal financial plan, and we're going to tie them together. And those two things together are going to support long-term value creation, because in the business, at some point, your business is going to transition. I want that to be on your terms, not on the terms of the probate court or the person who sues you, or the death, disability, divorce, delinquent payments, right? The liquidation of assets. Like I want a plan in place for you that builds the value that the business can truly capture. And so we're going to work on value creation, not just funding your lifestyle. There's a big difference. Okay. The O And B.O.S. stands for optimize and organize. In this stage, we're going to implement financial systems to increase profitability and efficiency. So those financial systems are going to be in both your business and your personal. And again, I'm going to say this probably 50 more times in this episode. We're going to tie them all together. So systems that increase profitability very well may mean that I'm going to see something inefficient in the way that you run the business and operations, a process breakdown, areas where maybe you're wasting money, maybe you're duplicating systems or paying too much for these services. And what I'm going to do is I'm going to bring in an operations consultant, and they're going to look at all of this from their wheelhouse, and they're going to help you fix it. And then we're going to get back to work on turning all of their efficiencies that they've created for you into ways to increase your bottom line profit. We want to increase bottom line profit so that it can be redeployed into the business healthily, or healthily is the word I said there, or we're going to use that to now create some personal financial freedom where we can pay the taxes, let you earn at a higher rate, go create other assets or buy another business or do an expansion or get a piece of real estate or, go do something else that will be a diversifier, and we can start to build value and net worth in other places beside the business. Because what we want to do is get to a point where most business owners have roughly 70, 80% or worse, meaning more, of their net worth is represented by the business value. We'd like to reduce that because that high concentration in any one investment is really problematic. It's the same for people who don't own a business. They have most of their net worth often tied up in their personal real estate. And that becomes a concentration issue as well, because if you're relying on your home's value to one day be profitable for you, we probably are going to run into a tax issue, especially if property values jump like they have over the past few years, and you're not going to qualify for the full exemption, so you're going to be exposed to long-term capital gains there. That can be problematic. Or if real estate values drop and suddenly you're underwater, or you lose the value that you thought you had, that also is problematic. And so we want to diversify assets. And it's so funny because, I talked about this for the Business Transition Summit. The keynote speaker, Ali Nasser, we had a conversation, and it was about this very topic. And I had made a comment that I thought it was interesting that business owners will take all the risk in the world, and they'll leverage everything in to make the business work. And that's acceptable. But if I told the same business owner that I want them to take 100% of every bit of money they have and put it in some stock, pick your stock, I don't care, Apple, Nvidia, Microsoft, Google, Tesla, whatever, Johnson & Johnson, Procter & Gamble, Berkshire Hathaway, whatever. I told you to put all of your money into that one stock. You're going to look at me and think I'm nuts, because that's entirely risky to throw all of your money into one simple thing, because what if it goes sideways? Well, that's what happens in business. And so we want to make sure that we're setting up the right systems to help you be profitable so that you're not taking on too much risk. And again, we can diversify some of that risk away. The next thing we're going to do is reduce tax liability through proactive planning and entity structuring. So we're going to make sure that based on how you run your business, how much money, revenue, and profit goes through the business, because there are some times where it's going to make sense to change your entity structure for tax purposes based on how well you're growing, how many employees you have, what your liability exposure is, that kind of thing. We're going to work with your tax professional to make sure that we're actually doing good tax planning along the way, meaning throughout the year, not just in, March 14th, the day before the corporate tax returns are due, or even worse, we're extending it, and then you have until September 15th to get the corporate tax return done. We actually want to do tax planning along the way so that we're not waiting for the tax filing deadline to find out what happened, or we're not doing that dance at the end of the year where we're trying to, get rid of profits. So we're going to do that along the way. The next thing we're going to do is protect assets with proper risk management strategies. So we're going to make sure that you have the right insurance liability protection. We're going to have legal safeguards in the business, meaning we're going to make sure that your operating agreement is up to date, that if your business has bylaws, that they're up to date and they're reflecting the way that you're running your business. Bylaws don't tell you how to run the business. They tell you how you are running your business, and there's a difference. So we want to make sure all of those documents are correct and they're up to date and there are no holes in that. And this is very important because if those documents are not correct and if you're not managing your cash well, you will have the effect of what's called piercing the corporate veil. And what that means is that the IRS court can rule that your business liability protection is void and it exposes all of your assets to any kind of suit. And it's all because you have commingled money, you have commingled assets with the business. So you've actually joined assets, which joins liability. And then when you get sued, you then say, no, I'm an LLC. I have limited liability protection. But the problem is you've tied everything together. You want to untie it when it's convenient, and IRS is going to say no. So we want to be sure that we're not putting you in a position to take on that level of risk that truly erodes your liability protection and exposes you to problems personally. The next thing we're going to do is organize investment and retirement planning strategies tailored for business owners. Now, that may mean things like the traditional business retirement sponsored plan, like a 401k, or a defined benefit plan, like a cash balance plan or something like that, or a 403b, or a solo 401k, or a SEP IRA, or a simple plan, something like that. We're going to possibly look at those. But the other thing is that for a lot of business owners, the business itself, that business value is kind of like their 401k because it's building value over time. And then at some point, they're going to start to liquidate it to fund their retirement expenses. And so we want to be sure that any which way that we're looking at the future, that we put the right vehicles in place to help you do that in the right way. All right, the first S stands for scale and secure. So we're going to develop strategies to scale the business while maintaining financial stability. That's very important because it's very easy as a business owner to get very excited about a shiny object and throw caution to the wind and put all of the chips on the table and make a strong bet that it's going to work out. And sometimes it does and sometimes it doesn't. So if you are looking to scale the business, let's actually put a smart plan in place. Let's execute it by steps. Let's bring in our ops consultants to help us do that. Let's bring in our legal consultants to help us do that, and myself to help us do that on the financial side. And when you have a team of people who are in your corner and working on your behalf, we're going to scare away the wrong people, which is what you need. We're going to make sure that we're steering that business into the right opportunity sectors, which is what we're going to do. And we're going to mitigate the risk along the way. So the next thing is identify opportunities for reinvestment into the business and personal wealth. Touched on this a little bit, but as assets grow and as free cash flow grows, we're going to want to shift the responsibility of the business holding that value into other places, meaning we're going to look for ways to diversify into other assets and to do other things, as I said earlier. The next part of that is we're going to secure a diversified wealth plan on the personal side that protects against over-reliance on the business assets. And that becomes important because that's part of the risk management strategy, right? If something happens to the business, if you miss payroll, if you get sued, if you have a key employee leave, if you have a competitor that pops up in the market and is taking market share, all of these things will increase your reliance on the business assets. We want to do a decrease there, again, by shifting things into other places in your net worth and financial plan. And the next thing, and I just talked about this, I'm getting a little bit ahead of myself, but we're going to implement financial contingency plans to ensure continuity and legacy planning. Legacy planning is very important because that business, for first generation business owners, that business is a large part of our identity. It's a large part of who we are. It's our life's work. For most of us, it's what we love. It's the thing we think about all the time. And for second generation owners, which is part of the legacy, they have a better job of seeing it as an asset, something that they bought that they can run well, that they can later transition, be it a sell or an internal transfer or something like that, but they see it as more of an asset. Legacy planning for first generation owners is very important because it's not only how does that business continue without you someday, but it's how do you continue without that business someday. And that's very important. So the business has a purpose. And while you're owning the business and working in the business and working on the business, you have a purpose. But at some point, you're going to be detached from that business. It's going to go on and have a second life. You're going to go on and have a second life. We need to make sure that you have a purpose as you move forward. So we're going to do the legacy planning. We're going to make sure that there's contingency plans in place, like there's some cash reserves for the business. There's some cash reserves personally. There's a well-written, well-defined exit strategy that we start years before you're ready to transition, and we execute all along the way by doing this type system. So that's what that means for continuity and legacy planning. All right, the final S in B.O.S.S stands for strategy and succession, which touches on legacy planning. So we're going to design a tax-efficient exit strategy tailored to business transition goals. So tailored to your business transition goals. Now, a tax-efficient exit strategy means that there are some people who think that the only way to exit the business is to sell it. And there's a blog post on lifemoveswealth.com. You can find it. And it talks about the 10 most common ways to transition a business. And there are quite a few of them. And some of them are more tax efficient than others. Some of them you're able to, if the business is set up appropriately, you're able to have a succession plan that allows you to defer a lot of capital gains. Because if you sell your business either outright or on an installment sale, you're going to have capital gains, long-term capital gains as the owner. And so some of those you can defer. There's a really, really cool exit strategy that allows you to exit with zero capital gains. But again, the business has to be set up appropriately, and it has to have a lot of cash flow. It takes some time, it takes some trust, and it takes some cash. And you have to be able to do it. And it takes the right people to be able to execute it. So there's a lot of different ways to do it. I mean, you can gift the business to charity. You can sell it to a family member or to a key employee or to your management team or to private equity or to the public markets. There's a lot of different ways to do it. Based on what your goals are, we want to make sure that we have that set up, that we establish the correct formation of the business and the correct operations of the business that drive toward that eventual exit. Because we don't want to decide that you want to exit one way, but we've had the business running toward a completely different direction, and now you can't do it, and it's too late because the IRS does lookbacks and they don't allow you to make a change while you're already in process with certain things. So we want that to be done correctly, which is why we start exit planning, not when you're ready to sell or transition, years before you're ready to sell or transition, so we can have everything set up and moving the right direction in the right order. The next thing we're going to do is maximize business valuation in preparation for any sale, succession, or liquidity event. So if your business has never had a proper valuation, I invite you to do that. I can refer you to a great business valuator. You need to understand, number one, what your business truly is worth. You need to have a range of values because that needs to go on your financial plan, and we need to be able to do that correctly and be projecting against the right number of assets. It's going to give you exposure, risk exposure tips. So areas where the business may need to be cleaned up a bit. It's going to talk about your entity structure. It's going to give you a lot of really good information about the business so that way you can know, here's where the business is now. Here's what I can do to clean it up, make it look better, make it more profitable, and then move forward. So we want to do business valuations, especially if you're starting to think anywhere within 5 years of a transition, we need to do a valuation if one's never been done. And then as we get closer, we probably want to recertify it. I shouldn't use the word certify. That may not be the right word. Maybe we have it reevaluated so that way we can see how the business has changed. That might be a better way to say it. And Laura, if you're listening, correct me on that one. Anyway, Next thing we're going to do is align post-exit wealth strategies for long-term financial independence. So this is where traditional advice is misaligned, because most financial advisors come into the situation when there's a transaction on the horizon. And as soon as the owner leaves the title company and the wire transfer hits the bank account, and now the owner's going, what do I do with all this money? The financial advisor goes, I'm here to save the day. Let me help you do it. And so then they start doing things that could have been better planned, better done for the business owner, like, I don't know, 2 years prior to that transaction. But again, I've talked about this before. Most financial advisors aren't compensated in a way that allows them to do that well, because it doesn't make sense for anybody to work for free for 2 years and then have a risk of all that money hitting the bank account, and suddenly the banker's in-house financial team calls, the investment banking team calls, then somebody reads about the liquidity events, or they hear about it, and then one of the big firms calls. And so now you've been working all this time with the advisor, and then here come all the pretty ladies all in a row, and you could possibly lose the business because they have something shinier than what you have. And that's problematic for people. So a lot of financial advisors do not want to take that risk. And so they'll say, hey, when you sell, give me a call. I'll help you figure out what to do next. And at Life Moves Wealth, well, we have a compensation structure that allows us to get paid along the way, because you're paying for financial advice, not for assets under management. And so it incentivizes both of us to work correctly through that period of time to reach the goal that you're trying to reach. And we're moving in the same direction, and we have no conflicts along the way. The final thing we're going to do in the strategy and succession is we're going to ensure that your financial freedom extends beyond the business ownership and into retirement and into legacy planning, which we've already talked about. So many business owners mistakenly think wealth begins when they sell their business. The B.O.S.S method ensures you are building personal financial independence while you're growing your business, not just waiting for that exit to fund your financial future, your retirement goals, your independence, your travel, your kids' college, your grandkids' college, all the things you want to do with your money when you transition the business. We're here to plan for that long before it happens. So, and then as a fee-only CFP, certified financial planner, with no product sales, we don't sell anything at Life Moves Wealth. We're not licensed for insurance, so we're not trying to sell you big insurance policies. We're not selling you annuities. We're not selling you private mutual funds. None of that stuff. If any of those things fit into your wealth plan and they make sense for you, like a private placement real estate fund as an example, or an opportunity zone fund or something like that, we're going to go find one. If insurance products make sense, we're going to get someone who can help us put those things in place, aligned with your financial plan, not just because it seems like a good idea and maybe there's some tax benefits, and hey, as the person selling the policy, I get a real fat commission. No. We're not going to do that stuff. We're going to align your financial life correctly. We offer conflict-free advice tailored exclusively to your best interest. And our focus and our mission is to help you run your business like an investor, not just an operator, so you can grow your wealth, optimize your exit strategy, and achieve financial independence without the emotional stress of having to navigate it alone. So that's the B.O.S.S system. That is the sorry, I'm clicking around on my phone. That is the business owner strategic success methodology. And again, the acronym for our process, we're going to B, build and balance; O, optimize and organize; S, scale and secure; and then the final S, strategy and succession. If we do all these things correctly, it's going to have both sides of your financial world working together, and it's going to make your financial life incredibly successful. Now, you hear me say this all the time. I walked in here today and there was a book on the counter, and I just happened to be thumbing through. You know, you pick up a book, you just kind of flip through, and I found something and I went, oh my goodness, this like ties in so well with what I'm talking about today. Now, this book is called 10 Minutes Early. It's by a gentleman by the name of John Morris, and John owns a company called PHP, Commercial Painting. Josh, do I have that right? PHP Commercial Painting. And John also has a podcast that's called Workforce Skills with John Morris. And John talks a lot about business. He talks about his business journey. He's been in business for a long time. He's a guy who believes in second chances. So a lot of his employees come from prison release programs. And so he has a really unique business model that works really well. His business has been very successful. The way he approaches leadership and people management, and it's more than just giving people a job. He's teaching men who have had a rough go in life how to be men in the way that they should be, and not like in the tough way that lands you in prison. He teaches you life skills. He brings his people in on Saturday mornings, and most of them come on a Saturday morning at 7:30 in the morning, and he does life application classes, and it's really, really cool. So anyway, I'm going to give John a plug here other than what I just did, because I want to read this. This is fantastic. So it's in his book, 10 Minutes Early. You can check it out. I believe it's on Amazon. Google it, 10 Minutes Early, John Morris. Buy a copy. Okay, here's what he said. So let me find a good place to start. Yeah, so in this section, he's talking about how he got the business set up and how he started to do it right. So the section says here, if you can't follow the law, you have no business creating rules. One of the hardest lessons I had to learn was this. How can I create a structure in my business if I wasn't following the rules myself? If I expected my employees to clock in on time, why was I taking jobs that paid under the table? If I wanted my company to operate professionally, why was I avoiding the legal side of things? You can't build an empire on a foundation of shortcuts. God, that is a powerful statement. I'm going to say it again. You can't build an empire on a foundation of shortcuts. Once I realized that, everything changed. I stopped taking cash jobs. I set up real payroll. I created policies and procedures and structure, because a business isn't just about making money. It's about building something that lasts. John's words. It's fantastic. And if you aren't running your company the right way, you don't have a company. I freaking love that. You just have a job you created for yourself. So one more time, if you aren't running your company the right way, you don't have a company. You just have a job you've created for yourself. The difference between hustlers and business owners. A lot of people think that they're building a business when they're really just trading their time for money. And that's, as an aside, you're either going to trade your time for money working for somebody else, or you're going to trade your time for money working for yourself the longer that you work in the business and not on it, which is what he's talking about here. A hustler chases the next paycheck. A business owner builds something that pays them long after the work is done. A hustler works job to job. A business owner creates a system that keeps the jobs coming in. A hustler gets stuck in the daily grind. A business owner works on the business, not just in it. I had spent years being a hustler. Now it was time to become a business owner. And the moment I made that shift, everything about my life changed. No shortcuts, no excuses. The standard is set. This was the point I knew there was no turning back. I wasn't cutting corners anymore. I wasn't making excuses. I wasn't just getting by. I was building something real. That's the standard. That's the expectation. If you want success, real sustainable success, there are no shortcuts. By the way, that's for all you social media, TikTokers, Instagrammers, whatever, looking for the quick way to make $1 million. If you want success, real sustainable success, there are no shortcuts. There are no shortcuts to building wealth. And if you're still looking for a shortcut, you're not ready for the next level. I can't wait to buy this book. This is really good. I mean, even just stumbling upon that page was like divine intervention for the way that I launched this episode. So 10 Minutes Early by John Morris. Check it out. I'm going to go buy one later today. Thanks, John. Thanks for leaving your book here so that way I could find it. That was perfect. But look, the B.O.S.S method, that's a trademark term, by the way, and that's going to look really freaking sweet on a hat coming soon. But if you're a business owner and you've heard this and any of this makes sense to you, which if you're a business owner and you've heard this, I hope it makes sense for you, because if it does, you should call me. And if it doesn't, you absolutely, definitely should call me like right now, because we need to make it make sense for you. Because you can either keep doing things half-ass in your business, not having your legal documents together, not having your cash flow together, not having processes, just taking every day as it comes, seeing what happens, figuring it out along the way, winging it because that's cool. I'm going to tell you, as a business owner, it's not cool, because at some point it's going to shortcut. You taking a shortcut is going to shortcut your opportunities to build wealth, which is what you're trying to do anyway. So let me help you do it. The B.O.S.S method will help you do it as well. And it's a defined process and it works magically. It's the way that we've been operating for a couple of years now. The B.O.S.S method helps us simplify it into terms that help people understand, oh, this is what you do. Because sometimes the hardest thing to do is explain what we do, because it doesn't quite connect. And most business owners aren't used to hearing it. They're used to hearing, oh, you just want me to send you money so you can manage it and collect a fee and whatever. So we're trying to change the game. We're not alone. There are other firms that do things like this. But in our neck of the woods, this is what we do. This is what we do better than anybody else. And if you're a business owner, the B.O.S.S method will work for you. Go to lifemoveswealth.com, click the schedule time with me button right at the bottom of the page, and I'll be waiting there for you. You can also send an email to info@lifemoveswealth.com, and we can get started, have a conversation about where you're at, what you're trying to do with your business, what makes sense, what will it cost to work with us, what will be included in that. But I'm going to tell you a couple things. If you want to work with me and Life Moves Wealth, number one, I'm not going to chase you. If you want to work with us, we will work with you, but I am not chasing you. I am too busy. Number two, you're going to pay us well, and we're going to have you do some work along the way too. So it's very important. Some of the conversations we have are going to just feel awkward, maybe a little bit painful, but it's because I'm trying to guide you somewhere that you really want to go. And we all know that if the path doesn't have any obstacles, it's probably not going to lead somewhere that's worth going. So obstacles are okay. Hard conversations are okay. You can do hard things. We can do them together. It's going to work out to your benefit. So info@lifemoveswealth.com. Feel free to send an email there, or go to lifemoveswealth.com, click the schedule button. We'll get you started on the B.O.S.S method. So that's it. Look forward to seeing you in the next episode. Look forward to talking to you more about the B.O.S.S method. And until next time, go be financially awesome. Go be a boss. See ya. Thanks for listening to this episode. Be sure to like, subscribe, and share. To learn more about your financial purpose, visit lifemoveswealth.com.